That's me. Y'all on level 1, I'm level 3. Pounding on the table for my team. Every night I flex, I'm making big moves. That's a big move. Big money, big moves.
KT, you there? Luca, what's going on, bro?
What's happening?
Happy New Year's, everyone. Before we start, I'm gonna just plug my tweet in. I know it was of 2021 that I really enjoyed. Thread above. Feel free to read it, guys. KT, what's going on? Luca, what's up? Guys, KT, what's going on? Luca, what's up? I think we have MM. MM, I think you're here. Happy New
I think
Year,
I'm
brother.
here. Hey, Happy New Year.
Happy New Year, everyone. Glad to have everyone. KT, are you there? I don't know if we can hear you. I don't think I can hear him. Luca, can you hear him?
I can't hear him now.
Luca, go ahead. I think you were saying something. Let me try to get KT back on.
Oh, I was just Happy New Year, everyone, and let's make 2022 freaking awesome.
Absolutely. Let's give everyone a minute or so. I think we have a good amount already piling in, which is awesome. Again, if you have questions, we will be taking them, so you can request to speak. We are going to do some markets overview before we get into them.
Can you guys hear me now?
Yes.
KT, you hear that?
Yeah, I think MM can hear me. Okay, there you go.
Now,
Yeah, I can hear you fine, brother.
Now we can. Happy New Year, bro.
Oh, perfect.
Yep.
Happy New Year, everyone. I
Happy
hope
New
you
Year.
rock this 2022.
Yes, that's exactly what we want to get started with. Again, Happy New Year, folks. Thanks for tuning in. I know it's a weekend, but a lot of people are probably excited to get back into the markets. I think not tomorrow. I think Tuesday.
No, it's tomorrow. I'm pretty sure tomorrow.
It's tomorrow?
Yep.
Is it?
Markets
Is it?
open
Okay,
tomorrow.
okay, got it.
Yeah.
Got it. So it's tomorrow then, because I wasn't sure if the markets were going to give a holiday for New Year's.
Not this
Friday.
year. It tends to be if it's like the day after, New Year's Day, they do it. But yeah, so next year and the year after and last year, but not this year.
Got it. Yeah, so we have the tweet up on for the spaces. So if you guys want to share this so we can get any of your friends interested to come and tune in, you can see the tweet pinned above for today's space. This is being recorded, so we'll definitely share it as well. But yeah, I guess to kick things off, this is a question I kind of threw at KT and Luca yesterday, and we had an interesting discussion. I'd love to hear from you too, MM, and kind of open question to all of you. The biggest thing, I think at this point, everyone's understood what the Fed is going to do. There's going to be rate hikes. You're going to have quantitative easing slowing down. And again, if someone wants to explain that just for the audience, again, we can do that. You got rate hikes potentially 3 is what is priced in. That's what people feel. This doesn't account for the refinancing of debt that MM had mentioned later in 2022. Elon put a tweet out yesterday saying he expects a recession at some point in 2023. And I think with inflation running hot, if inflation can't get curbed, that's like one of the biggest macro factors, right? In recession, inflation running hot, you have unemployment change, your rates rising. So those are kind of like the perfect storm to potentially a recession happening. I mean, 2008 was a big event-driven recession based on what happened with the housing market. There's usually something big in the backdrop as well happening. So people, I sense, are fearing a lot because there's a lot of uncertainty of midterm elections. So if you don't know where to put your capital, like a lot of people understand, I think some of these factors happening, people tuning into our spaces have heard us talk about this over and over. What are you guys thinking? I know KT had said he liquidated his Apple position. He's holding on to that cash, and I think that was a very sized position that he liquidated late last year. So just kind of, if someone wants to kind of take that off, and then let's have a conversation around that. And I'm sure folks are thinking, what do you do with this capital now? You don't have the rates right now, but rates haven't risen yet. So yeah, go ahead, Evan.
Yeah, so first, just to kick it off, to just sort of talk about what's happened so far and what we are anticipating, what the current expectations are. So, remember we went into October with the idea that there wasn't necessarily certainty of even a taper. Then we got into November, we saw some certainty about tapering, but where rate hikes were supposed to happen were further priced out, maybe in early 2023, 2024 for some of these rate hikes. A lot of those expectations have been pulled forward. So as of December's meeting, expectations are now that QE, the tapering of QE will be accelerated, and that we will see 2 to 3 rate hikes starting off in March when QE may have at that point ended. Now, it's important to keep in mind that tapering means slowing down of asset purchases. So it doesn't mean they're selling their balance sheet. It's not the same thing as quantitative tightening. It's basically the Fed has been injecting liquidity into the markets. The amount of liquidity that they're injecting is slowing gradually and now at a more accelerated basis until it stops entirely. Now, it's important to also look at what Jay Powell has said and the Fed's own words. And what Jay Powell has said, and really has said throughout this entire sort of post-COVID situation or post-COVID correction situation, I guess I could say, is that, they're data-driven. So if there are material changes in the economy, they may revise policy. And their QE language also says, they're going to taper by up to. So I think it's important to keep that in mind too, because they may not necessarily taper at the rate that they've said if the economy deteriorates before they're really completed with that process. So I just want to leave those ideas in everyone's mind so we can have a good conversation about it. What is happening? What isn't happening? There's been no discussion about the timing of QT or quantitative tightening or whether that's even going to happen. Important to remember that in late 2018, that was one of the things putting a lot of pressure on markets. And in my view, if we do actually see quantitative tightening on the horizon, or if we actually see a real rate hiking cycle manifest, those are two bearish macro events for the markets. Either one of those could be pretty problematic, especially the later part of the rate hiking cycle and quantitative tightening should it manifest. So, what we're looking at going into 2022 is really the idea that we have an economy that is slowing, both here and globally, and that global liquidity is beginning to tighten a bit, although offset to some degree by the recent dovish actions by the People's Bank of China, who really has no other choice if they want to save their real estate market, which is the biggest market in the entire world. So if it did actually collapse, and I'm not suggesting it will, but if it did, it would be a problem for everyone. So they're doing what they can to try to stabilize that market, and they're injecting liquidity into the market. They're basically doing their own sort of version of a quantitative easing policy that they're beginning to kick off. And that has given a little bit of bid to some risk assets. So I think that's interesting to watch. But my outlook for 2022 so far, and obviously as we see data, it may change if I'm incorrect, and if the data says otherwise, is that we'll probably see a slowdown in the velocity of inflation as well. As the economy is slowing down, and as well as global liquidity, probably more on the tighter end just because of where central bank policy is everywhere outside of China and places that are more inconsequential like Turkey, which is also easing, much to the chagrin of everyone who holds the lira. But ultimately, I think that the Fed has given themselves enough latitude that if indeed the economy slows materially, if inflation begins to abate in terms of its velocity, not necessarily prices on the ground, that they may change their policy. Remember, this is Jay Powell's Fed of pivoting and then pivoting again and then pivoting again, and now openly being questioned by some media as to whether they're credible anymore. So just a thought we should all keep in mind. There's no certainty as to what the Fed's actually going to do. They've only given us expectations that have consistently changed over time. So I think that, in 2022, in most of these situations, and we haven't had a lot of QE policy that we can really look at to understand what happens when it ends. But what we've seen in countries with, advanced countries with central banks that have engaged in QE is they have a lot of trouble fully ending it. That means normalization of balance sheet. In fact, no country that's engaged in QE has ever fully normalized the policy. So we're in some degrees of uncharted territory if they ever did actually strive towards normalization. On the other side of that, though, you've got a debt supercycle that is increasingly fragile and leveraged at the sovereign level, at the corporate level, at the financial level, and in many areas at the household level.
Hey, so you're flowing really well, Emin, but this topic that you're talking about, the cycle, and so, I think it's a little bit, I guess, advanced fixed income. You want to break that down for someone that has no idea what that means?
Yeah, so and I think that's a great point, Rahul. So so since the 1980s, when rates peaked, we've seen an increasing amount of debt in a lot of countries at the government level, at the corporate balance sheet level, and at the household level, and at the financial system level, and banks, insurance companies, so on and so forth. And that debt is increasing as rates are going down. And some players are less leveraged than others. There's some corporations where their balance sheets are the best they've ever been, but there's also pockets of the market where, if rates were to normalize, it would be highly problematic. And so here's just an example within the US government, right? Let's say the 10-year bond is at 1.5%. We've got $30 trillion of debt. And usually the rate at which the government pays debt is around that rate of the 10-year bond. So it's a benchmark rate, not just for the US government, but for a lot of other debt around the world. So 1.5% of 30 trillion, that's 450 billion of deficit spend on that debt, right? That's manageable. It's not great, especially when the Fed's monetizing because they pay back the interest earned on the treasuries that they have. So we'll revisit that in a moment. But that's a big cost discounter for the debt that the government issues and the Fed buys. So let's say rates rise to 2%. That's $600 billion of deficit spend on the U.S. government debt every year. And that's also assuming the debt's not growing, which it will, right? And $600 billion, well, look at the DoD budget for I think it was 2021, it was about $740 billion. So now you have the amount of interest paid on debt approaching that of the largest government line item. So what about 3%, which a lot of people are saying that, 10 years going to 3%, rates are rising. Well, then the interest payment, the deficit spend on U.S. government debt, just by the U.S. government alone, not talking about states, not talking about local, not talking about other countries, that becomes $900 billion a year of deficit spend. That's greater than the DoD budget. So now think about this. There's over $150 trillion of global debt that keys off the 10-year rate. So all of a sudden, that 2 or 3% becomes a lot more consequential. You're talking about, really trillions of dollars of potential losses if we've seen anything approaching normalization of rates across the yield curve, and especially on that 10-year approaching 3%. So that's kind of enough to set off a global credit crisis, right? So whatever the Fed does do, whatever other central banks do, they have to account for the increasing fragility and leverage of this debt super cycle. And that $150 trillion of debt that keys off the 10-year note, that's not all the global debt in the world. There's much more than that. And there's also a lot of other derivatives that factor in. So essentially, you have to kind of look at it from the perspective of a policymaker, right? On the one hand, inflation is not palatable. Even if a lot of this is cost push inflation from the supply side, which they have a lot more limited control over, pulling the levers that they do. On the other hand, they don't want to push so hard that rates go up enough that they create a global credit crisis that becomes a Gordian knot that's much harder to resolve. Look at the response to COVID as an example of that, how quickly central banks around the world flooded the world with liquidity, because the alternative was that same kind of credit crisis creates a feedback loop, and not only does it become more expensive to address it with policy, but it also becomes more destructive at a socioeconomic level. So there really wasn't any other choice. So I guess what I'm saying in simple terms really is, in 2022, it's a balancing act for central banks around the world, and it doesn't mean there's binary outcomes. They don't want either one of those outcomes. They don't want inflation, and they don't want high inflation, and they don't want deflation either. Right? The ideal scenario for most advanced economies is low inflation to disinflation. That's sort of a very narrow window. That's a Goldilocks economy. And we've had that kind of a Goldilocks economy really since the 90s until very recently. And now it's kind of unraveling. And a lot of participants in the economy, participants in financial markets aren't necessarily familiar with dealing with these kinds of pressures, with dealing with increasing raw costs, with dealing with increasing inflationary pressure. And then you also see it in the labor market, increasing costs. So, I would say that if anything, there's a greater lack of certainty as to what 2022 looks like, because it's really going to be about how does the economy take shape? Is it indeed slowing? Is the velocity of inflation slowing? And is global liquidity continuing to diminish in abundance and also in the velocity at which it is entering in markets? Which all these things in my mind seem to be likely, which gives central banks more latitude to adjust policy should they need to if we see any exogenous events. And China seems to be producing them by the week or month. We see different elements of their, again, biggest market of any in the world, their real estate market, kind of trembling. They had to bail out another company. It became 1/3 state-owned last week. That was one of the reasons markets got a little bit nervous. But so, we have to keep an eye on global macro more than we did even in 2021. That's the point of all this. What we do in terms of our investing in trades and where we are in both the global economic cycle and our local cycle is going to depend a lot about how things manifest. What do jobs data look like? What inflation looks like? What retail participation looks like? Are we past peak consumer participation in the economy or not? So I would say that, this is going to be a really interesting year because it's a pivot in a lot of ways, but we're not necessarily certain in which direction. And that is to say, if the People's Bank of China gets real aggressive with their monetary policy, that can offset some of the liquidity constriction from the Fed, from the ECB, from the Bank of England, from the Bank of Japan, and so forth. And that's something to factor in. In fact, when the Bank of China started to talk more about how they were going dovish tilt, we saw a lot of the higher risk areas catch a pretty good bid, right? I mean, we know Chinese stocks have been in a bear market for a while, but we saw a bid come back to not just them, but things like SPACs, growth, biotechs, high beta, higher risk areas of the market just for a little bit on those headlines. And I think that's important to pay attention to because that velocity of liquidity, the wall of central bank stimulus that entered the markets from April of 2020 on, that velocity peaked in late February to May. And so did a lot of those same higher risk assets I just talked about. There's no coincidence there. So, central banks pivoting has that, it's the opposite effect. It's offsetting. So I think that's all very important to pay attention to as well. What are central banks doing? What are their policies? What are they saying? Because the other thing that we've seen over and over again this year is half their policy objectives are completed by jawboning and trial balloons. So what does that mean? It means they don't change the policy, they just talk about what they might do. And that changes sentiment in the market, and that can complete a policy objective as well. So I know there's not a lot of certainty in what I'm saying. We haven't even had the first trading day of the year yet, so we kind of got to see how that goes off, how the first week goes. Last week, we ended pretty soft. On Friday, there was a lot of selling. Some of that had to do with the way JP Morgan's hedges were being put on. They sold a lot of calls, I think 47,000 calls or something towards the close. That created some selling pressures. You saw in the S&P, NASDAQ, and small caps. A lot of things kind of got faded towards the end of the day. So it's going to be important to see how futures open tonight, but most importantly, how markets close tomorrow and get a sense as to kind of where we're going this year from the news, from the macro. How does Omicron play out? How does inflation play out? How does China play out? What are central banks doing, right? So those are the things I recommend we watch. And of course, I'll be talking about it. And we'll be continuing to talk about it on Pounding the Table on these spaces as well.
Wow. Yeah, that was, I felt like a straight economics lecture at some, school. That was amazing, MM. And if you guys don't, obviously follow MM if you don't, but he also has a YouTube channel, which it's been amazing as well. So a lot of these macro discussions are shared there as well. So definitely give that a follow as well if you enjoyed that, because I think that on a high level and just a economic policy level is really amazing. There's a lot of other factors too, as you mentioned, MM. With Omicron, you also have the past couple of years in February, the markets have run up. I think that also is partially due to some of the tax payments people have to do in April. I don't know if people kind of, some things kind of run up based on that. People sell and use some of that capital to pay. You also have, like I said, Omicron kind of, I think the peak people are saying is going to be the first week of January into February 9th. And then you have FOMC in March, the first Fed meeting. I think that's where the rate hike is expected. So a lot to look into. And then earnings will kick off as well. End of January, you have, I think, usually Tesla's one of the first big tech names who just show their numbers of deliveries, and they're close to 1 million for the year. I think 966,000, and Wall Street was expecting 270,000. So huge beat there. So congrats to Elon. That was incredible. But I'm not sure if Katie or Luca have anything to add there, but I do know we have some questions. So I'll kind of just ask Fat Gorilla if you want to ask your question.
Hey guys, how's it going? I just wanted to impart a little bit of my opinion on the recent downturn in the growth stocks and just analyzing them from a technical analysis. In my opinion, it seems like they hit a pretty hard support in early December, bounced off that, and then we saw another steady decline going into the end, which I attribute mainly to tax loss selling because of the kind of earlier sell-off, the support, and then a slow downtrend on relatively low volume for at least some of the higher quality names that I think got taken down with that entire sector. And I want to know what you guys might think from an economic analysis or a more fundamental analysis as opposed to the technical.
KT, you want to take that one? All right, man, go ahead.
Yeah, that's a great question. I think it's going to be really important to see where we get our signals from in terms of kind of where we are in the cycle, right? There are a lot of signals going into November and December that it felt like we were getting later cycle, both from Fed policy and some of the signs we're seeing in the economy, and some of the performance that we've seen in commodities and cyclical stocks and sort of the rotations that have happened underneath the surface. Now, does that mean that it's set in stone, that's all going to sort of be what plays out in 2022? No, it really doesn't. Markets are fluid, and they've probably never been more fluid. We've had these preferences for which theme or which factor is favored, kind of shift on a week by week, month by month, sometimes even lately a day by day basis. So I'm looking at things like, where are real rates going? Are real rates going deeper into the negative? Is there some velocity to that decline? Is the yield curve flattening out again? Are we seeing some more concerns about growth more than, like economic growth being the concern rather than inflation? In that kind of environment, typically small to mid cap growth stocks should do better, because the appetite for longer duration speculative risk is likely to increase. Why? Because if you're seeing real rates drop, then what temptation is there to buy return-free risk on the U.S. sovereign yield curve? And if you go out to other places in the world outside the emerging markets, your returns are going to be worse and your risk might be higher. So people are usually willing to take on greater risk in that type of an environment. So we really got to kind of see how macro takes shape. I agree with you on the technical side. It looks like there's some exhaustion It looks like a lot of the tax loss selling and other kind of emotional flows out of some of those factors has maybe wrapped up, but we need to see a reversal, right? We need to see a reversal that takes us to a higher high and a higher low from like the recent ones where we've had lower highs and lower lows to really quantify that on a technical basis. So I think it's a wait and see. The first week of January is going to be important because we still see those beginning of month, beginning of quarter, beginning of year flows. So we get some ideas to which sectors and factors are in favor by institutions as well. So I think that's going to be important to watch as much as macro is.
Yeah, well said. KT or Luca, anything to add there? I want to talk to you guys as well.
Yeah, so coming to the growth sector per se, when we got the bid late December, I think something to keep on note is that the Fed said they would cut a lot of QE, but they did not. Right, like they did add that 20 billion again in December to their balance sheet. So like what said, it completely makes sense. Like I'm just wowed by how good he just articulated the entire thing. But as long as you do not see any kind of a proper pivot from the Fed, they just have been changing their tone every single time, and what happened in December was their FOMC said something, the balance sheet said something else. So that's where people were weighing in on Omicron kind of changed changed the Fed's view and things like that. And this week we have the FOMC again, so that might clear up some of the air coming from the macro perspective. And but from the technical perspective, I think there is if you look at the internals, right, like they kind of went from worse in November to a little better going into December close. Yes, there was a lot of tax selling and things like that that was kind of anticipated. But from the technical perspective, though, I'm still bullish on how things are shaping out into 2021 right now.
Nice. Luca, anything to add, man?
Yeah, I really echo both Marcus Mayhem and Problem Sniper there. I mean, at the end of the day, I look at the markets and I'm still pretty darn bullish on 2022. You really look at when it comes to more macro data points, and really what it boils down to on that front is what the Fed's going to do. And I feel like over the course of the past 2 months, personally, I feel like some of that has been priced in. Some argue that it's all been priced in. I feel like some of the expectation has been priced in. I feel like maybe possibly the few months of the year, this is just a guess. You could see some of these growth names rebound. Who knows how much, but I do think you could see a rebound there. But really long term, I continue to sit tight. I continue to focus on the biggest names in the game and the best of breed names. I continue to hold my longs into the new year, my Apple, my Nvidia, my AMD, etc. So that's really where I'm at the moment, sitting tight. I want to see what happens this week. I feel like this week could definitely decide some direction on the month, or at least give us a hint as to where we're going. The past 2 months there's been a lot going on. A lot of that revolves around the Fed, and I feel like a lot of that volatility maybe is starting to ease out of the market, but who really knows? That's just a guess. And the previous two speakers, my oh my, I think they pretty much nailed it when it comes to macro.
Yeah, just when MM was flowing like water, man, he got kicked off Spaces, but I think he'll be back shortly. He's having some technical issues, but hopefully that answers your question, Fat Gorilla. Ronnie Soto, I think you had a question. If anyone has any questions, you can request to speak. We did a lot of macro coverage in the first 10 minutes, so we're happy to take some Q&A going forward. Hey, Ronnie, are you there? Ronnie Soto? I guess he's not. I think MM's back. MM, anything to add?
I fortunately I missed out on that. Twitter Spaces is crashing for me again on my phone. So where did things leave off?
I think Luca was saying how he believes a lot of growth has priced in a correction or has corrected to a certain degree in the past 2 months. And he still remains bullish into 2022. And I think, that's kind of where Luca left off. I think KT would primarily agree with what you said on the macro basis, and is looking to see what happens in the first week of January.
Hey guys, I wanted to ask a question. Does anyone
Go ahead, Alan. Alan, you there?
I'm having some microphone issues, so I just don't want to bother you. I wanted to ask, has anyone talked about the interest rate spread between European rates and U.S. rates and how it's going to affect macro?
I think MM touched on it briefly. We didn't cover it in depth comparing to Europe directly. I guess once MM is back, we can have him chime in on that because he's been following that pretty closely. So just hold on a second, Alan. I think MM's rebooting his phone, and we'll have you ask that question to him. David Aspinall, what's up?
Twitter Spaces has been like ridiculous for the last 2 weeks for some reason.
Yeah, it's insane, dude. I don't know why every time MM's on the floor and they rug him. It's so annoying. And it sucks because sometimes the follow-up questions like this one are directly from him. It's like we have to wait then, but it's fine. David, are you there? Do you have a question? Right, I guess not. KT, are you following that at all with the Europe, I guess, spread or rates?
Yeah, I mean, like it usually is. They usually follow. They usually follow what U.S. Fed does with respect to what I think, right? Like if you look at the grand scheme of things, but yeah, I mean, negative interest rates and things like that have been something that we have seen in Europe and Japan for quite some time, and like the economy right now. If you look at the entire economy, I feel it is kind of sucky at the moment. But will they like increase the rates as fast and things like that? I don't really think so. I mean, they might in the next couple of years, but they need to see a lot of improvement in their economy altogether with this Brexit and things like that happened in that demographics. So yeah, that's all I kind of know, Raul. Like I don't really focus on Europe as much. My primary focus is US and China.
Yeah. Well, MM, are you back? Are you here?
Hey guys, let me just make a comment on something that was just said.
Go ahead.
And the last time the Fed raised their rates, and they raised them to 2.5% prematurely, and the euro got crushed, and our economy slowed down. What makes you think that the connected dot Feds making 2 to 3 increases in this year won't slow down the U.S. economy as the European economy continues to stagger because of COVID and the lockdowns? The spread gets to 250 basis points between the U.S. rates and European rates. 10-year rates, if it gets to, right now it's 178. If it gets above 200, that'll cause the euro to collapse and make U.S. goods more expensive. I'm sure no one's addressed that because you're not viewing the connected dot Fed's errors in the past.
Yeah, you might be right on that.
We actually did discuss that initially, but go ahead.
No. I think I think you're looking at it in that standpoint. Yes, but will Europe do whatever it's necessary? Also, right? Like like. I personally think the reason why certain goods are a lot cheaper in United States than in Europe is because like we have a lot of imports from China. Like that's what at least I'm not an expert in that field, but and if you're saying like okay, all the exports from US are going to be a lot more expensive now. Yeah, I mean, how much exports do we do to Europe is another question. Like I don't know answers for, but
MM, are you there?
Probably, maybe.
Yes, you're here.
Oh, yeah,
you,
we'll see how long it lets me. So it was about COVID rates in Europe?
It's COVID rates in Europe and the spread between our rates and Europe, I guess, debt.
Okay. Well, in terms of the COVID rates, it seems like we're getting some promising data out of a lot of the European countries that have Omicron as its prevailing variant. Seems like there's lower risk of hospitalization. Those that are hospitalized, I think it's about a 40% lower risk. Those that are hospitalized have about a 20% lower risk of needing oxygenation. And death rates, fatality rates from cases that are identified as Omicron are 90 to 95% lower than prior variants. So there's a lot of encouraging data, but it is also extremely contagious. So the other side of it is it could still overwhelm resources just because of how fast it spreads. So it's a bit of a balancing act, but I am very glad to see that, less people are getting severely sick and less people are dying versus prior variants. And of course, this is still early data. We have to see how it manifests and whether other variants spring off of Omicron. But the initial data is encouraging. In terms of sovereign debt rate spreads, I think one of the things that's happening in Europe and Japan is just, you've got economies that are in really poor shape. The risk of durable inflation in either area is pretty low. And I think that's one reason that you have sovereign debt at those levels. The others is that you've got both areas, central banks engaging in negative interest rate policy to some degree, in addition to aggressive QE. And so that's distorted their sovereign debt markets more than ours. If we have a meaningful push of inflation higher, that could change that entire paradigm. But remember that the global financial system is still very precarious in terms of sensitivity to higher rates. So I still think that there's an impulse by policymakers to try to jawbone down inflation without having to effectuate policy outcomes that could undermine the global financial system and cause a severe credit crisis.
Nice. Hopefully that answers your question to a certain degree, Alan. Eric, I see we have you. What's going on, Eric?
What's up, guys? How's it going?
Good.
Happy belated birthday, my friend. I got to wish you on Twitter, but not in person, or not in person, but virtually, right?
Yeah. No, thanks a lot, dude. Yeah, it was 30 on 30, so it was a cool birthday.
Hell yeah, dude. Man, I know I hate to jump from all the fun macro talk, but what's on everyone's shopping list for 2022? I know one that I've kind of been stupidly not in is Zoom ZI. Why am I not in that stock? That stock is has been crushing earnings and sales. So I know everyone's got their 2022 list coming out. Ben wrote a good one. Pattern Profits wrote a good one that I'm starting to track. I know Chris is coming out with a list tonight. Chris Peruna. So yeah. And Mayhem, what's up, dude? I haven't seen, or we haven't talked in a minute. So hope you're doing well, my friend. So yeah, I was trying to move away from the macro and get some stock ideas, or maybe ETFs that people are trading. So yeah, Happy New Year. I hope everyone's doing well.
Hey, Rahul, also happy belated birthday to you, brother. I didn't know you had turned 30. That's big, the big 3-0. So congratulations, my friend. You're killing it. And hey, Eric, good to see you. Good to see you after our start in this journey of 2022. I hope everyone that's listening, and you all too, especially, I hope everyone had a great holiday break and New Year's celebration, and you had some time with your family and to decompress and really enjoy yourselves, and and are excited to get back into the markets here. But so I think that from a shopping list perspective, I'm still waiting for a little bit more. I have been accumulating some stuff in growth. One of the ones that I think is pretty interesting that doesn't get a lot of talk, and Rahul and I and others are going to be hosting a cybersecurity spaces pretty soon. But my favorite sector for 2022 and really for the back half of 2021 was cybersecurity, and really in some of the overlooked kind of stocks. So one that I've been accumulating, and I feel, on dips, I still like to accumulate as long as my investment thesis is intact, is Tenable Holdings, TENB. And the reason that I like them, and I'm not saying anyone else should buy it, obviously do your homework first, just this talking about my own view, but the reason I like them is because we have a world where not only is there an increasing need for cybersecurity, but there's an increasing need for automation, orchestration, vulnerability assessment, and response to incidents. And that's kind of the nexus of what this company does. And it's not a FinTwit favorite, which tells me there's still plenty of room to the upside because investor participation from a retail level on this one's not very high.
Yeah, no, and thanks for the wishes, MM. I appreciate it. And Eric, I guess to answer your question, so I feel like I own a good amount of the stocks I want to own. I think you and I have a similar style in growth investing. The stocks I have bought recently or added to my positions have been Crowd, Coin, Affirm, a little bit premature a few weeks ago, but it's been holding up relatively okay. So those are the three I've added to. So I'm going to continue watching them. Airbnb is another one I've been eyeing. It's still not below my cost. I may have to average up on that one. So those are the few that I'm kind of eyeing. SC, I also added SC at 218. So it's right there still. Averaged up on that one. So yeah, I'm going to continue watching kind of the names I already own. As MM said, we're going to be hosting a space on Crowd like cloud and cybersecurity in general. Overall, it's coming out very soon, actually, next week. So I'll launch those details pretty soon. The flyer is done. It's a great panel, so it should be an exciting space. So we'll cover some cybersecurity stocks there in depth. Another one I've been watching and reading up more on, which has held up pretty well. Like I was watching it through this like growth correction, and it didn't really dip as much as I would have liked. It held up its moving averages pretty well. Was Datadog. So
Yeah,
that's another one I'm
that's
gonna
been
keep an eye
the
on
leader in
because
that space.
they're crushing it. And there was another stock I owned in the observing cloud
Splunk.
monitoring space. Yeah, not Splunk. It was Dynatrace DT.
Oh, okay.
I owned that in 2021. I actually got in at a great price. I got in at 40. Ended up selling at around like 50s in early March when the market started correcting initially, and I just didn't have as much conviction. So exited that one. But what I should have done was actually moved in that capital into Datadog, but I just never really looked into that one in depth as much as what I would have liked. So I'm reassessing that position name in general because I think they've been crushing it for the past couple of quarters overall. And I want to continue kind of allocating towards this sector of cloud and cybersecurity. I already own Net, so I'm not touching that one. I haven't sold a share yet. Call me stupid or whatever, but it's
Never
something
stupid.
I've been
Never
owning that
stupid.
one since '60s, and it's a good position. So I'm a little nervous just to see how things go, but I'm happy where it's held so far. So let's see what happens there. Yeah. Other than that, I'm not looking at too much else. I think like and KT had said initially, just want to see how this week starts off. I had mentioned the last 2 Februarys we've seen the market top out, so I'm gonna watch the pricing going into February. Then we have earnings coming up, so I think it's still a little bit of wait and watch for me. I do have some cash to deploy, so yeah, just kind of watching these names and specifically that I already added to. Coinbase is probably one of the first positions I'll just maybe continue accumulating. I'm pretty bullish on crypto in general, and I have Ethereum and Bitcoin, but I think if Coin hits on what they're kind of saying, and I think they can continue lowering their revenue from being based on fees to building these other legs that they're getting into, whether that be the crypto cloud or Coinbase Ventures, which is amazing, by the way, because if you have a company that's in crypto, has the first mover advantage, and they are allocating money into the ecosystem of like blockchain, and some of those bets hit off, I mean, I don't know what can happen in the future, but I mean, Brian Armstrong seems like he has his head in the right place. So, and the NFT marketplace, which is huge. I just read yesterday, OpenSea, even until March 2020, their revenue was in the thousands, and I believe that was for a quarterly like revenue, not yearly, but that's insane because their revenue jumped from that to billions in almost a year just off the NFT marketplace that they built, and that's on 500 million users. Oh, that's on 500,000 users. Sorry, not 500 million, 500,000. And I think it jumped to like 8 to 10 billion. I forget what it was, but it was ridiculous. Coinbase, when they launched the NFT marketplace, just on like a hold for like waiting to like build that up, they have I think over 2 million users waiting to kind of jump in for NFT marketplace on Coinbase. So that's a revenue that I doubt most of Wall Street has even put in their models. And they're trading at a reasonable valuation, 10 to 15 times sales here. Actually, it might be 10, maybe it might be even lower, depending on Friday's close. But again, this is not a Coinbase pitch, but just a stock I'm just continuing to look into.
No, always do your DD. But no, I know we've been talking about coin. I know that's just one where it's just I just think if you're buying it today, you really got to have that 5-year outlook with Coinbase.
Yeah,
Like you really just have
yeah,
to. That's
exactly.
one where it's like, okay, there might be moments where you dip under your cost, and you just have to kind of. I think you really just got to give them a little time with some of this macro headwind. I wanted to throw out two more too, and I haven't. I've done a little homework, but I'm not like an expert. So if there's like expert questions on this, Pure Storage. I mean, I read just a basic article from like the technology letter. I don't know if anyone subscribes to that, but I've like just a website out, and it's fantastic. It's got CEO interviews, but very like logically laid out. And they seem to really be pivoting the chips that they're going to be using for kind of cloud compute. There's going to be an inflection point where the chips that Pure Storage makes will be more cost efficient than some of these, commoditized businesses. And what will be nice is that those chips don't need to be replaced. There will be like a very long life cycle with Pure Storage chips. And then some of the brokerages. I mean, IBKR has really held up well. And then one that I've seen no one talk about is TradeWeb, TW. I've done very little homework on this. I'm just looking at the relative strength on it, and I'm like, wow, no one's talked about this, and it's like, what's it at? It's like not even off the high. It's like it's 2% off its 52-week high. So just a few more than watching. I got to still dig in and do some homework on them, but yeah, it's always good hearing what people are watching, people are looking at. Just because you know if you're all kind of looking at the same thing, or you all kind of have a similar thesis, that's a good one. Mayhem, I've got 10B Mark II, so it was good hearing someone else is bullish on that one. I'm still watching Task too. You were like one of the first ones on Task, and that one has just like, I know it's had its issues, partly because of the share, or some of the, I'm using the wrong term, but like they had shares locked up and now they're freed up essentially. But I really like that business they're in. Again, being able to kind of outsource some of some of these technologies to a BPO. I think that's really useful. So that's just what I'm looking at.
I agree. I think that also it's come down to evaluations quite attractive. So that is another one that I've been looking at and kind of nibbling at. When it hit the 40s and started to bounce back, I had some confidence it was honoring a trend line. It started to form in July, August. So I think it's a very interesting one to look at, especially the AI side and the optionality that brings to the business to convert it from a body shop to something with better revenue, better better revenue growth, and also more margin expansion potential. So that's definitely an interesting one. So for those listening, that's TASK or Task Us.
Yeah, and I mean, 5 billion market cap. I mean, come here. I love those kind of because again, what does it really take to get it to 5 billion to 7 billion? Again, if liquidity starts to tighten, though, you could see some issues there. But yeah, I mean, that's just a great business. Guys, I gotta go eat breakfast. It's always a pleasure talking to you guys. I'll take it easy. Have a good day. Happy New Year.
Thanks.
Happy New Year, Eric. Thanks for joining us.
Yeah, thanks for having me. Talk to you guys.
Thanks for the birthday wishes, man. Appreciate it.
Yeah, you guys take care. Bye bye.
Thanks a lot. I see your question, Fed Gorilla. I'm gonna ask that next. I see we have Bond Von Grouch. Did you have a question?
Yeah. Hey, folks. Thank you for letting me on this panel here to ask some questions. Really appreciate the macro discussion, actually, from all the contributors. So I think just two things that are coming to mind that I'd love to get your thoughts on here. First thing on the Fed rates and.
Uh-oh.
Oops.
You cut out there, Bond. You may want to check your mic. You just kind of cut off after you said Fed rates.
Yeah, Bond, if you get back on, happy to kind of take that question. But just going with the flow, we did have a question coming from Fat Gorilla, which I thought was pretty interesting. What do you think of Nancy Pelosi's recent buys? I think she disclosed she had Google, Disney, Salesforce, Microsoft, which we actually covered. KT got a ripper a couple weeks ago, and Roblox. Any guys' thoughts on that? She's like the best stock trader in the game.
I mean, I think we got to look at that with a degree of optimism in the sense as to where we might be on the way to September of 2022, right? Paul Pelosi, who's putting on these trades, he's a really good trader. He's got a little bit of insider knowledge, you might say. So, sometimes he gets these trades where he has a little bit of insight, perhaps more than the average person. Not everyone is married to the Speaker of the House and has all of that information available to them. So, if it was up to me, I'd say these folks should be in blind trusts or muni bonds or otherwise, but it's not up to me. So this is the world we live in. I think, Paul's been right on a lot of things. And remember, these are options trades. These are things like leaps and, kind of long dated calls. These structures are not the sort of thing that the average trader is doing or the average investor is doing when they're buying shares. So, how they perform and how we might perform could be a little different. So maybe might be good to look at that trade, but net, it's a show of confidence to some degree. I mean, this was no small amount of money that they put forward.
Yeah, it's pretty insane, some of the trades that she's put on. But KT, I would love to hear from you on this question, as well as, I know you look at Airbnb, but if you want to take that last question that Eric posed, I'm sure people are probably wondering this as well, right? What stocks we're looking at. So feel free to answer both, KT.
Yeah, a few stocks that I'm looking at. Firstly, I think I'll go about the Nancy Pelosi question though. Like I think the way she put out that list was almost like saying telling people, hey, this is my list for 2022, and these are the top gainers or something like that. But the list that she that was put out, it is phenomenal in the sense that CRM, it didn't see that huge software run up. Like, it's one of the biggest companies out there, and we didn't see as much as Microsoft or others have run. So I think it has a lot of growth potential into 2022, and is also on top of my list after she bought the calls. That's something on my radar. Um, I'm actually looking into Amazon. Like I have repeatedly said, I sold all my Amazon position in 2016, 2017, being very stupid. Well, I gained all that back and more on Tesla, but yeah, now I want to start a startup position on Amazon, specifically in January. And if you look at the seasonality perspective, right, all the down months, all the down January since 1950, if January, the month of January is down, we have had a very elongated bearish sentiment in the market since 1950. So if we see a down month or something like that in January, that's when I'll be a little more cautious into putting some of these trades. But yeah, Amazon is another one that I'm looking for. Roblox, I feel after she published about Roblox, I was never long on Roblox because I'm a huge fan of Facebook now. I have no position yet, but that's something that I'm thinking of adding, because my long-term 5-year price target on Facebook would be somewhere around 600, 650 if they can like literally hit off on this Oculus and the hardware perspective penetration that they are going towards. So Facebook is on the top of my list, and Roblox goes lower because I don't usually try to invest money into the tier 2 names or the tier 3 names. I'm always in that tier 1
Real quick before you
category.
keep going, Katie, I hate to cut you off, but Facebook is something that intrigues me as well. I've never invested in it because of Zuckerberg, but just the VR and AR space, as well as if they get the metaverse somewhat right, which again some people still find premature and early, but I think he has probably a lot to prove, and I think he's really ambitious. So if he gets it right, I mean, the stock could definitely benefit from that. What are you waiting for in terms? Are you waiting for January? Are you waiting for a specific moving average? I'm sure someone might be wondering that in the audience. So just kind of a general question on that one, but please continue.
Yeah, I'm not waiting on the technical setup on Facebook at the moment. I'm looking at the broader market macro perspective. I need some evidence that the market like the thing is, from what I see will happen to SPX or with respect to QQQ this year is, I think we'll have an elongated flag, like what Amazon did last year or what IWM did last year, right? But there will be opportunities where Amazon was absolutely flat last year, but look at Apple, look at Microsoft, right? Like there will be opportunities, there will be rotation of money towards other stocks, other sectors, and the ones that already ran might do an elongated flag. That's partly the reason why I was saying, I was selling my Apple position because I don't see as much as growth potential as I could see in probably Amazon and Facebook at some point. And to your point, Rahul, like that's exactly why I never invested in Facebook. For me, Facebook is exactly like Twitter in terms of my outlook all these years. But now I'll tell you why, because Facebook is just an app. An app goes onto an app store and a Google Play. And if Google or Apple, they decide, okay, I'm going to screw up with Facebook or Mark Zuckerberg at some point, and they're like, okay, I'm banning this app from my platform. And there you go. That's the huge loss to that company. I mean, they won't do it with respect to how big Facebook is right now, but for me, that was the outlook. But now, with their own platform, with their own ecosystem coming up with Oculus and their hardware and things like that, that's where I really love Tesla and Apple, the hardware software integration coming together. I never invested in Google too, so I'm a guy who really finds it fascinating where a company goes with the complete integration of the hardware and software with that ecosystem being formed, and that's where I think the success lies for the company. So now Facebook is getting into that phase, like where they are getting into that hardware software kind of business. So that's where I'm a little more intrigued about Facebook. The other stocks that I'm looking for are Airbnb. Again, it is definitely a leader in that space. Yes, the hotel businesses and things like that, they like if they grow, Airbnb grows. That's how I take it. And coming out of the pandemic and staying how they have been structured since their IPO or before their IPO, I think it's a great company, and has a lot of growth potential to it as well. That's another company that I'm looking for. The other ones that I like, like these are high risk, low risk kind of things. Like I'm also interested in Walmart at the moment. If you see how Walmart kind of playing these mind games at the moment, like Walmart has not raised their prices while all the other retail markets have, all the other retail companies have. They have actually gained a lot of people and into saying, okay, Walmart is a lot more cheaper than other retail stores, and now they are going there, and I think they will rise prices later this year. But once you capture that market, I think they like they are doing a very strategic job, I feel. So maybe 2022 might be their might be the year they might grow as well. I'm not again, Walmart, I'm not looking at 5-year 10-year time frame, but I'm looking at a year and a half investment perspective there. And I had a list actually. Let me take a look at
And
that
while
as
you
well.
pull that up, I just want to say we're talking about individual names now. I want to be sure and everyone's cognizant of this, that none of these are stock recommendations. This is just our opinions and research we're sharing. So this is not buy, sell, hold advice by any means. And anything we do on Planning the Table should be taken with that notion that it's purely just research and content. We are sharing our own thoughts. But yeah, KT, go ahead. I think we had a question also come in. Bucky Dollar.
Hey, how's everybody doing, man? I've really been I've been looking at a lot of analysts speak about like cybersecurity. Me personally, I think that cybersecurity 2022 could be big for cybersecurity just because of all the metaverse talk and things of that nature. I really like crowd. I feel like a lot of the cybersecurity stocks are on sale right now. They sold off at the end of the year. I really like CrowdStrike, Zscaler, and Cloudflare. I just wanted to get y'all thoughts on those.
Yeah, no, that's a good question. We actually covered that just short, like 10 minutes ago. But yeah, I think no, it's all good. It's all good. We can cover it again. So I'm pretty bullish on cybersecurity as well. As I mentioned earlier, I own CrowdStrike, I own Cloudflare, and I don't own ZS, but I am somewhat looking into it. So with cybersecurity, I've written about this as well. They're set to grow at a rapid pace in the next decade. I mean, I was reading somewhere the other day, I think it was just like a week ago, that CrowdStrike is handling like 1 billion events or trillion events. I don't know if it was a day, a month, something ridiculous the amount of threats and ransom attacks that they're trying to prevent. And what happens with these threats is people, I don't think fully understand this, is not only are they preventing it, their AI systems are getting smarter each time a threat comes in. And the amount of digital adoption that has pulled forward from, I would say, from 2030 to 2025 almost, right? Because a lot of the CIOs or CTOs at many companies have said they've accelerated their roadmaps by 2 to 3 years in some cases in adapting or moving over to the cloud. So cybersecurity is going to have a huge role to play. I think the problem with it, or the challenge it faces, is it gets bucketed into a growth sector or growth area, as well as a lot of these stocks have run up. So they went through a natural correction and they'll continue to do so. But with companies like CrowdStrike, for example, or even Cloudflare, they have impressive margins, they have great products, and they continue to innovate those products, right? Whether you look at CrowdStrike's Falcon platform, Cloudflare is announcing literally new features and services they offer all the time. Like literally, they're probably one of the best marketing companies, I'd say, in the cloud space. So I own both of them. Again, I'm not saying this is a great time to buy. I think there's a lot of macro factors to look into, as well as we're going to be doing a very detailed space on cybersecurity. It's going to be on January 12th, 5:30 Eastern time. I have like 6 speakers for that one. Being one of them. Actually, I think, has worked in the cybersecurity space himself, so has pretty deep knowledge. I think he's back. If you want to chime in, I would love to hear your thoughts as well.
Yeah, sure. It sounds like we're talking about cybersecurity. What's the question or the
question is just general, like what do you think about cybersecurity sector, as well as Cloudflare, CrowdStrike, and Zscaler? I think was the 3 names he mentioned. I own 2 out of the 3. I don't own Zscaler, but I know they've done really well. I own CrowdStrike and Cloudflare for quite some time. For longer, CrowdStrike is more recent. In the past few months, I started my position. But I told him I'm pretty bullish on cybersecurity. I am going to post a thread I've written on cybersecurity up here that you can read into as well while answers this.
Cool. Appreciate it. Another one I was looking at was Sitting to One. They're pretty new, but they're also into the cybersecurity space. But yeah, love to hear what you respond.
I'll try to keep it short just because it seems like the app likes crashing. But from what I can see in cybersecurity, we're early on in a generational trend of increasing demand for services and products across the sector. The threatscape is increasing. The amount of vulnerabilities that are out there that are being actively exploited by bad actors, whether it's governments, corporations, hacking groups, et cetera, whether it's espionage, attacks, ransomware, other kinds of threats, they're all growing across the board. In fact, since COVID started, these threats have grown anywhere between 300 and 600%. So this is the beginning of a very big generational trend. Cybersecurity is growing at about an 18 to 20% compound annual growth rate, depending on where you look at it. Certain sectors within it or certain subsectors within it, like EDR.
Oh man.
I think we lost him, man. I hate when this happens. Yeah, so
he was giving the jewels up too, man.
he's nice. He's nice with cybersecurity. But here's what I did. I shared my thread, which shares a lot of statistical data that is kind of chiming into. You can see it. It's pinned above. I wrote it in September. But I think you get the idea. We're pretty bullish cybersecurity. It really depends on which stocks you like. A lot of the names you mentioned are leaders in different portions of cybersecurity. So, like, cybersecurity has different challenges, right? Whether it be observing the attack, reacting to the attack, preventing the attack, also managing the service of managing through your ecosystem. So these, like, for example, like Zscaler is a zero trust company. So they're doing things like, for example, if your company's on the cloud and working from home a lot, like, you're probably going to be onto Zscaler or CrowdStrike. So they all have different use cases. Whereas Cloudflare is a CDN network, right? So if someone wants to understand that, I've written in depth about Cloudflare as well. So there's a lot to space, and we can go on. We can have entire spaces dedicated to cybersecurity. Like I said, we're going to be on January 12th, Bucky Dollar. Please tune in to that one, and we'll record that one as well and share it again. And I think one thing we tend to get with these spaces, like, for example, today you're able to join in, you might not be able to join in that day, and people always ask, like, can you post a recording, or we don't know when you're going to be on spaces. The easiest way to do it or understand is if you're following us, you'll see the notification on that we're going to be on spaces. Like, today was impromptu, January 12th is planned. So we have these type of spaces where some are planned, some aren't. So give the panel a follow if you've enjoyed the discussion so far. I'm pounding the table, Problem Sniper, and we'll continue the conversation. So hopefully that answers your question partially, Bucky Dollar.
Yeah. Thank you. Great information. Appreciate it.
Absolutely. You're welcome. And if anyone else has any questions, but Katie, I think I cut you off a little bit. You were saying you had some list of stocks that you were looking at, so feel free to jump back into that.
No, the last stock I was going to talk about was Disney. Disney is another one that I'm looking into because of how good they have been trying to penetrate into the markets, right? Like the way I kind of see that is, if you know about this, Rahul, like Netflix cut their rates in India, and that's partly the reason why why Disney has acquired Hotstar and are penetrating into that market. They are getting into that metaverse, and they recognize that the technology is legit, and has potential to it, and it's evolving into more of just a Mickey Mouse company. So yeah, I mean, that's another one that I'm looking forward to add, and that also has been on Pelosi's list of stocks, I believe. But I kind of forgot about that. But Disney is the last one that I'm also looking for, and probably accumulating for long term.
Nice. Oh, long term. So that's going to be over a year for you, Katie. Okay. Interesting. I owned Disney since 2017. I foolishly sold it in 2020 when COVID happened. I kind of fell for the panic and wasn't sure what was going to happen. But another reason was, for me, my initial thesis was Bob Iger was a CEO, stepped down. I actually bought into the stock when they acquired, the acquisitions they made through 2017, 2018. To integrate into their kind of entertainment business, and I was really bullish on that. And you saw it pan out because what they did is they built that entertainment business to have so much content that they launched Disney Plus in November, I think it was 2019, when the stock actually hit a 52-week high. During that time, I think, so I had bought it in the 90s in 2017, and they used to pay a really good dividend, which they paused because of COVID. And it ran to like 155 when it launched, because you had a record number of people sign up initially right away. I don't know what the price is now. I haven't followed that stock since I sold it in 2020. But that initial thesis played out exactly as it as it was kind of planned for the next couple of years from that point on. So I think it kind of hits on a really important point, though, because we're talking about a lot of stocks, and it's really important to form your own thesis and test that thesis going on every quarter, right? Because you want to make sure that you build your own conviction, and at the same time that stock's actually doing what you think it was supposed to do or what you imagined it to be based on the information and data you were given, right? You can only react to data or information that a company presents. So it's kind of important to kind of continue to test that along with the macro factors that you have in the economic system, right? That's a whole other factor and a different part which we covered initially. So great points there, KT. SB, I think you have a question.
Yeah, happy New Year, guys. Just a quick question on Tesla. I'm sure majority of you have seen the deliveries number this morning, blowing it out of the park. Just wanted to kind of short term what your thoughts are on the company and even long term with all the competition in the space like Rivian, Ford, and GM.
Yeah.
Thanks, guys.
Yeah, no, I'm happy to answer that, and we can get KT's thoughts as well. So I've hosted many spaces with Sawyer, who's one of I think best Twitters on Twitter about Tesla in general. I'm gonna pin a couple important threads. I think that's important for me to before I chime in. So I just pinned one on Tesla in general, and then now I'm just pinning one on the EV space. All right, here we go. So we have that data. If you want to check it out, please do. So number one, EV adoption is at 4% of total sales today. This could exceed 40% by 2030, which when I wrote this thread, a lot of people said that's actually very conservative, which I agree with, but I'm just based, again, like I just said, the data we're given, that's all I can go off of. So this chart shows how that 40% will play out. So 4% today, I think out of that 4%, Elon was on Wall Street Journal a couple weeks ago, which I also summarized. I don't have the thread with me, but again, there's too much content to share. So I'm just going to put this one up. So he said that half of that 4% is by Tesla. So they already control a vast majority of EV production. Today, they hit, like you said, a record number of deliveries, 966,000. Wall Street was expecting 270,000. And you've seen that priced in, right? People expected this to be a record year. We kind of saw that notion kick in mid-year where the stock was pretty much flat going into 2022. They ran up in the S&P inclusion end of 2020, which KT crushed those calls on. And then you had that stock, again, plateau through the year. And then it started ticking up when they saw a quarter-over-quarter expansion, that the Gigafactory expansion, and China had a record, response to buying as well. So I'm pretty bullish overall in the EV sector. I own Lucid, I own Tesla, and I own a very, really small position on this company called Arrival, which was a SPAC. They haven't really done so well yet, but again, it's a very tiny position. But my main EV positions are Tesla and Lucid. Lucid I've been in literally since the data SPAC was rumored. Started that position at $11. Tesla I've been in went right before it split last year. So I think that was September 2020 it split. And so with Tesla, I think there's a couple things to share. So the 4%, as I said today, could hit 40+% by 2030. So that itself, you can do the math. I mean, if Tesla continues to kind of own that space, the numbers are going to be astronomical on how much revenue they're going to bring in. And they're fully, like, they have the tools in place to kind of continue owning that sector in terms of their mass production, their like excellence in the car, and also people's acceptance. It's become almost like a brand symbol if you own a Tesla. So I think they're going to continue growing. I think there's definitely going to be people eating into the space. You'll have Lucid, you'll have Ford with F-150, you'll have Rivian. That's going to happen. It's natural. They created a sector. A sector is going to be split into a percentage, right? But they're the first leader. They're the first mover. I think they're going to continue owning that. What I think is interesting about Tesla is you can't invest in it as a car company. Investing as a car company, then I think your thesis is a bit not fully intact. So a tweet I put up. So Tesla is not only in EVs, they're trying to get into robots. Their solar roof business is it's growing. They're in the energy space, right? So there's a lot they can do with consumer energy and renting out some of their energy plants, right? As well as robotaxis, which and the FSD, right, which is the self-driving. They're collecting a lot of data, and what happens with that, right? So Elon was very bullish on that whole space. And one of the things he said is, think of Tesla as a robot company, and the four wheels on the car are robots driving. So he thinks of this company very just in the Elon way, very innovative and super forward-looking. They invested in Bitcoin pretty early. So the reason I'm pointing out all these things is because they're doing so much that I think that's the appeal in Tesla now, right? We know they're an EV company. They've crushed the EV space. They're going to continue crushing that, right? I don't want a company, or I don't want a stock for one kind of product or one leg, right? I want a company to continue to expand, innovate, and grow, which Tesla is doing. So overall, I remain bullish on Tesla. I do think one of the biggest risk factors that I think everyone kind of understands is that Elon is probably going to leave in this decade. I think his focus is on Mars, but I'm not as concerned because I think he has the right team and people in place, and Tesla's at a point where it could function pretty much, it can function without him. I mean, I don't want that to happen, but I think they're at that point. He's gearing them to that kind of phase where he can leave and move on to SpaceX, and Tesla continues to run. So it's pretty expensive. I mean, it's $1 trillion market cap, so it's definitely expensive stock. I do think it has room to run, but again, I don't know how much of that's going to happen in this year. All the stocks I buy are very for longer duration of time, 3 to 5 years. So that's kind of my thesis on Tesla. But KT, I don't know if you have anything to add.
Yeah, very, very good points, Raul. Like I'll touch on a couple of points too on Tesla. Like on the numbers perspective, if you look at it, like they have not forward guided or anything like that, right? Like because we have 2 new factories that are coming out this year, next year. So the Austin and Berlin, both these factories are going to come out, and their production is going to increase by a lot more because there's a lot more demand as well. And if you look at the EV adoption, it is huge. And I like what Rahul is doing with respect to Lucid or Rivian. I'm not invested in any other companies but Tesla. But again, I only own 1/4 my position right now. Sold most of my position in 2021 when Elon Musk put out that tweet. I was like, okay, I'm getting out too, and then I'll get back in. And most of the characteristics for me with respect to Tesla is very technical. When I join the stock is when the price action goes and hits the 50 EMA on the weekly time frame. That's when I get back into the stock, and I'm like, I'll ride it back up again. So that's just how I kind of trade and invest into Tesla, and I really love the company because of what I just mentioned with respect to what is happening with Facebook. That hardware software integration and creating that ecosystem is where things are going. And like everybody talked about, how Apple would not survive without Steve Jobs. But hey, we are here. Like Apple is a $3 trillion company right now. So with respect to Tesla, also Elon Musk has created a war chest with all those stock sales and things like that after the split. And he is sitting on a boatload of stock, and the company is profitable also. So and the best part is, just like how Apple was, where when you look at an iPod, you knew where Apple was progressing to back when Steve Jobs was the CEO. The same thing that I see with Tesla too. Like I never viewed Tesla as a car company, and Elon Musk is proving that. I mean, when you're looking at robots that are out as his next thing, when you're looking at the battery technology, the energy sector that he wants to penetrate into in Texas and things like that. Like there's a lot more coming out from Tesla. Again, the robo taxis, not to forget to mention that. And there are things and views that he knows where to guide the company, and those are the visions that are put forward by a leader, even if they are not part of that company. And that is the reason why I believe in Tesla being a very, very, very good investment going to long term. But the way I kind of manage my portfolio is different from how I view a company. But overall, very bullish on Tesla.
SP, does that answer your question?
Yeah, no, that answered my question. Thanks a lot, guys. I guess silly question, but what would you have to, if you had to guess, what would you say Tesla's pre-market tomorrow based on this news?
KT, I think you're more of a technical guy.
I was just looking at the weekly time frame on Tesla. It was a shooting star setup, so I'm thinking they would kill the premiums first before they actually move. But those numbers are very, very good. So the premiums were a bit inflated too. So I'm kind of hesitant to say that, but I think we will open flat, or if we pop into green, we will definitely see some profit booking tomorrow.
Awesome. Thanks, guys.
Yeah, you're welcome, SP. Thanks for joining in. Thanks for that question. We're getting a boatload of questions. I see them all. I'll try to get to everyone one at a time. If you have a question, please feel free to request. So I think the next question came in from Durang. What's up, Durang?
Yes. It was interesting to hear the discussion about the adoption of EVs. What's your thought on supply constraints, whether it be the availability of copper or the availability of lithium, to really allow EVs to take the market share that you believe them to be? Thank you.
Yeah, this is a question that usually comes up on every Tesla discussion, and I think people are, I guess that's like the main counter argument on EV in general, because you have, you need some of these, I guess, resources to continue to deliver on the EV space. To give you I don't have a perfect answer for you. I think the fact that I think we've really seen a true demand increase in the past year and a half, honestly. Before that, I don't think EVs were as widely accepted as they are today. So I think this is a space, or this is a point of discussion I continue to look into. I don't have a detailed answer here with me, but I do know that this is a question that's come up quite often. I'm sure Elon has spoken about it briefly. I know when he's been asked about it in previous interviews, he doesn't really take it as a concern. He says we have plenty of resource available, whether it be lithium. There's a lot of recycling battery companies coming out as well. So personally, I haven't seen it as a key risk anytime soon. But I think what your question is gearing towards is, if you see that mass adoption kind of exponentially grow, that is going to be more of a prevalent risk. And I think that's something I would probably have to see how it plays out through this year, honestly, because I think Tesla just hit almost 1 million in deliveries. So if that continues, then we'll have to see kind of how things go. But it's definitely a valid concern and a valid point. And I've heard this question every time Tesla is discussed. So the fact that you're looking at that is great. KT, I don't know if you looked into that in depth.
Not really, Rahul. I think you touched on most of it, and we had that discussion always with Soiron also. Covered a bunch of times.
And I'll post the source spaces. We just did one on December 20th or 21st. I have to grab that. So we'll definitely post that as well on Pounding the Table YouTube if you want to listen into that. Dina, did you have a question? Dina, are you there? Dina Macer. All right. Guess you're not there right now. Lionel Snow, did you have a question?
I don't have a question. I'm just listening right now.
Oh, all right. All good. I'm just going to remove you from a speaker if you don't have any questions. I think we had one just come in. Saeed Shanawaz, do you have a question? Hey, Saeed. Can you hear him, KT?
I don't hear him, Rahul.
Saeed, are you there?
Hello.
Hey.
I have one question. Hello.
Sure.
I have one question. I'm a graduate BSc Computer Science. I need to work on Elon Musk. They have any courses? Is there?
Sorry, you cut off a little bit. You were looking for coursework, looking in what subject?
BSc Computer Science.
You want to learn more in computer science? Is that your question?
I am working Elon Musk company. I need to work in that. I need more skills. What type skills can you learn?
Okay, so I think the question is a skills-based KT. I'd say, I mean, if you're working in Elon, did he say he's working in the Elon Musk company? I guess you're working in Tesla.
He wants to. He wants
Oh,
to
he
work
wants
in
to.
Elon
Okay,
Musk.
got it. Okay, so, well, Elon's a technical guy, so I mean, I know his background's in physics and engineering. I would imagine him to want people that are kind of in that kind of realm, depending on the job you're applying to. I'm not sure. Tesla probably has a lot of different jobs, but it seems like you want a technical-oriented job. One site that I do recommend on building your skill set, if that's something you're looking to do, is udemy.com, udemy.com, has a lot of good courses for really good pricing on kind of technical skills, and I think that's a great way to do it. Obviously, YouTube is a great resource. I think between those you should have plenty of information to kind of learn from.
Thank you so much.
You're welcome. KT, I don't know if you have anything to add. Jerry Mid, you have a question?
I do. Hey, thanks for hosting this short notice. I just wanted to find out, what is your take on the short selling rules and SEC? If there's any movement there, have you heard of anything, any crackdowns, anything to stop some of that false narrative out there from SEC?
SEC is just like the government. They are super slow. Like I don't see regulations that are going to come up at the moment, right? Like the like the hedge funds hold the control, man. Like the people who have the money are the ones who control these rules and regulations, and I don't think there's anything coming out right now from them. We'll hear some chatter here and there about AMC, GME, and then they'll crash and go back up and things like that. But I never usually trade on that noise at all, or anything related to that. I mean. It's nice to know the rules, but they don't really apply to us anyway. I mean, we always abide by the rules, and we don't try to do something out of the box, and that. And if we do, that's where the regulations come in. So I mean, it's usually something that I don't really look for at all.
Yeah. I bring that up because there's a lot of agencies that are under the microscope, FDA, SEC, and wondering if the status quo is going to continue as retail and has more exposure and has more information at their fingertips on what's really going on behind the curtain. So didn't know if you guys had an opinion on that.
None from mine. Praful, if you have any.
No, I mean, I'm not really engaged in that type of trading anyway, so it doesn't really concern me.
Right on. Thank you.
You're welcome. Shiki, did you have a question? Shiki00.
Yes. So my question was about Airbnb. So as a bullish case may be considered because it may be considered a winning stock, so people will travel. It's rural areas revenues increasing. So many bullish cases, but you can argue also about the bearish side there because of COVID and the pandemic. It has benefited because people have been working from home, therefore renting their houses, etc. I just want to know what you think about Airbnb for next year, as it's a tough situation. Thank you very much.
Yeah, I mean, if you look at Airbnb, they did not benefit out of COVID. I feel like when you look at some of the interviews back in 2020, the CEO did come out. They said, we have built this company for 8 years, and now we are back to square one, where not making any money. We spent a lot of money. We cutting back on, and he apologized to all the employees that they did cut off when we were hit with COVID in 2020, and there was travel bans, everything going on. And after that, after the fact, like after 2020 is when people really realized that how much they missed traveling and how much they missed being out of the box that they usually live in. And that's where I think to your point, that's where you can argue that okay, Airbnb did get the wind behind them, and have had some push in 2021. But overall, the way they managed themselves in 2020 and how they rewinded themselves from that crunch situation, and are growing even more going into 2022 is where my bullish case lies. And yes, there is always risk. And when you're talking about the downside of Airbnb, the downside I would think in terms of where these hotel businesses can also start their own Airbnbs with the liabilities that with the not the liabilities, with the assets that they hold, right? Like they can build websites around that and things like that, like how Expedia or Booking.com have been doing. They can be a potential threat to Airbnb, but the way Airbnb has conducted themselves, I see them being the leader. And how long does it take for Airbnb to be added to the S&P? Now they are into Nasdaq, and I feel there is more upside potential to the downside risks on Airbnb. And like how Elon Musk also says, right, more competition is always good in a sector. That's where I'm going with Airbnb too, where if these bigger hotels and Booking, Expedia, and things like that are also venturing out into such like VRBO and I think Booking was the one who bought VRBO or something like that happened in 2020. I'm not 100% sure, but like if these companies and the other bigger uh, uh, established companies are looking into a business model like Airbnb, that means there is potential for more growth in that sector, and there's more venturing out that can be done there, and that's where my bullish case lies, and I feel it's a good opportunity going forward.
Perfect. Thank you very much.
Awesome. I think we've been on for quite some time, KT. I'm happy to wrap here if you are. Again, we will be hosting many of these spaces. We've been hosting a lot. I have a thread pinned above with all of our spaces and the YouTube recording, so you can follow that. If you missed any space, our next one is on January 6th with Brian Feraldi. Following up on that one, there's another one on January 12th, which is going to be cybersecurity based. Give KT a follow, give Pounding the Table a follow, and you can follow me as well if you want to keep up in tune with these spaces and just the markets in general. This is something we do pretty often. And if you're following, you'll definitely hear from us and our tweets on spaces and when they're going to be happening and so on. So this was recorded as well, so we'll definitely try to post it, in a very quick and prompt fashion. So thank you, KT. I don't know if you have anything else to add.
Nothing else, man. A great way to start 2022. I hope you guys are ready with your goals and looking forward for trading and for that financial freedom that you all are here for. So all the best, and let's kill it this year.
Awesome. Thanks a lot, KT, and thanks everyone for tuning in. Hopefully you found this helpful. Thanks, everyone.
Me. Y'all on level 1, I'm level 3. Pounding on the table for my team. Every night I flex, I'm making big moves. That's a big move. Big money, big